Let us see the next question. A firm has total sales of 200 lakhs, of which 80% is on credit. So 200 lakhs into 0.8, 160 lakhs is on credit. It is offering the terms of 2 by 40 net 120. Means the credit period is 120 days, and if at all the customer is making payment within 40 days, then there is a cash discount of 2%. Of the total, 50% of the customers avail discount, and the balance will make payment in 120 days. So whatever the total data that we have, total credit sales that we have is divided into two parts. 50% are availing discount, and the remaining 50% are making payment in 120 days. Past experience indicates that bad debts loss are around 1% of the credit sales. So percentage of the bad debts is given. The firm spends about 2,40,000 per annum to administer its credit sales. Highlight the portion. These are avoidable as the factor is prepared to buy the firm's receivable. Means specifically they have provided to us that these 2,40,000 expenses will not be incurred in future. He will charge 2% commission. He will pay advance against the receivable to the firm at an interest rate of 10% after withholding 10% as a result. So factor is always 10%. The first question. What is the effective cost of the factoring? Consider 1 year is equal to 360 days. So taking into account 360 days in a year, you are required to compute the effective cost of the factoring. It means that we are required to find such cost of capital of the company at which so the cost of both the options will be same. That is what we understand. So let us calculate the answer. Working note number 1. Calculation of credit sales. A small working note. It is total sales into 80%. Total sales is 200 lakhs into 80%, that comes to 160 lakhs. That is the total sale, that is the credit sales of the company. Now friends, the question is not providing the information regarding the average collection period directly. So taking into account this credit terms which have been provided to us, we can make the calculation of the average collection period. We have been given that the 50% of the customers are availing discount. It means that they are making payment in 40 days, and the remaining 50% customers are making payment in 120 days. That kind of specification is made. Even if this kind of specification would not have been made, we will always assume that the remaining customers are making payment in due time period unless we have been provided that they delay the payment. So over here, working note number 2, calculation of average collection period. Customers are divided into two parts. Customers who avail cash discount and customers who do not avail cash discount. Percentage. 50% is falling in the first category and the remaining 50% is falling in the second category. Number of days. Customers who are availing cash discount are making payment in 40 days and the remaining customers are making payment in 120 days. Percentage into days. So 0.50 into 40, that comes to 20. 0.50 into 120, that comes to 60. That is the way weighted average collection period can be calculated. It is 80 days. Overall collection period is calculated 80 days. So friends, over here, the question is not providing the information directly, but indirectly information is provided by us. That is, say, information is provided to us. So we have made the computation of the credit sales and average collection period. Importantly, friends, you can see further, the question is not providing the information that what will be the credit terms, what will be the percentage of the customers availing discount, not availing discount. All that information is missing once you appoint the factor. So in that case, the institute has made an assumption like this, that the credit sales will remain same, credit terms will remain same, percentage of the customers availing discount will remain same, and even the average collection period will remain same. That is the kind of assumption that even we have to make for solving the question. So return answer. It has not been given that what will be revise the sales, comma, collection period, comma, percentage of customers availing discount, comma, once factor is appointed. Full stop. So we assume that all of them will remain same, comma, as in-house management of the receivable. This is what we understand. Now, I want you to make the calculation of the step number 1 debtors and the loan amount on your own and put your answer in the chat box. So now step number 1, debtors. In bracket I am writing after appointment of factor. In that we understand it is annual credit sales divided by 360 days, which is given to us in the question, into average collection period. So it is 160 lakhs divided by 360 days into 80 days. So it is 35 lakh 55,556. That is when the amount of the debtors is supposed to be calculated. Step number 2, calculation of loan amount. I request all of you to put answer in the chat box for the loan amount. In my opinion, this is the most important working that we have. in case of the factoring question, that is the loan amount. Column number 1 particulars, column number 2 is answer. In that data says amount of 35 lakh 55,556. Less factor reserve, it is 10%. So 3,55,556. That is 35,55,556 into 10%. Less factoring commission, we have been provided with the information that the factoring commission is at the rate of 2%. So 35,55,556 into 2%, that comes to 71,111. So this is the amount on which interest is calculated. So please use your calculator. 35,55,556 minus 3,55,556 minus 71,111. So it is 31,28,889 less interest collected in advance. Because again over here we make an assumption that the interest is collected in advance. 31,28,889 into rate of interest is provided as 18% into 80 divided by 360. That is where the interest is collected in advance. So into 0.18 into 80 divided by 360. 1,25,156. Okay. Now difference of both of them is the loan amount. So 31,28,889 minus 1,25,156. So 30,03,733. This is the way we make the computation of the loan amount. We start with the debtors minus factor reserve minus factoring commission, then minus interest, that is the loan amount. Now amount of the interest to be collected in, factoring commission to be collected in advance, in that you could have done answer like this: 160 lakhs, that is the credit sales, into 2%, that is the amount of the commission, into 80 divided by 360. So we can say that 160 lakhs into 2%, that is 3,20,000 into 80 divided by 360. That is also the way we can compute the amount of the factoring commission to be deducted in advance. So try to do step number 3 on your own. That is the total cost for the in-house and total cost for the factoring services. So friends, over here, in case of in-house management of the receivable, the total cost will be found something like this. We understand that, say, as per the given information, 2,40,000 rupees is the administration cost or the collection cost. Then 160 lakhs into 1%, 1,60,000 is the loss on account of bad debts. Those two are the expenses which we have apparently. So we start with the bad debts. It is 160 lakhs into 1%. That comes to 1,60,000. Next, collection cost or administration cost, it is 2,40,000. Next, carrying cost. As far as the carrying cost is concerned, in that 160 lakhs divided by 360 into 80 into cost of capital is X. So 35 lakh 55,556 into X, because the amount of the data has already been found by us. Importantly, cash discount, because the question says that the 50% of the customers are availing discount. So 160 lakhs into 0.5, so 80 lakhs into 2%. So 80 lakhs into 2%. So it is 1,60,000. This is the cash discount expenses. This is in case of in-house management of the receivable. Once you appoint the factor, assuming that it is non-recourse factoring services, the bad debts expense will be 0. Collection cost for that, so they have specifically given that it will be avoided. Since we are assuming that the cash, that is the terms and conditions will remain same, percentage of the customers availing discount will remain same, so cash discount expense will remain same. Next will be interest payment to factor. Okay. What is the amount of the interest to be paid to factor? Let us understand and say how to calculate the same. It is 31,28,889 into the rate of interest at which the loan will be given is 18%. 31,28,889 into 18%. That comes to 5,63,200. Okay. Now we will be having the payment of the factoring commission. We can see that the commission is at the rate of 2%. Okay. So 160 lakhs into 2%, that comes to 3,20,000. This is the way we will have the payment of the factoring commission. Next, we will be having the carrying cost of the own funds, because what will happen, 35 lakh 55,556 is the amount of the debtors. Out of that, so this is the amount for which you are getting loan, 30 lakh 3,733. So difference of that, say you invest with your own funds, which has a cost of X, 35 lakh 55,556 minus 30 lakh 3,733. So it comes to 5,51,823 into X. That is the carrying cost of the own funds. This is the way we will make the computation of the total cost. For in-house and total cost for factor, that is appointment of the factor. Use a calculator, 1,60,000 plus 2,40,000 plus again 1,60,000. So it comes to 5,60,000 plus 35,55,556 into X. This is the total cost for in-house. Once you appoint the factor, it is 1,60,000 plus 563,200 plus 3,20,000. So it is 10,43,200 plus 5,51,823 into x. That is the way we are required to keep the equation. Now after this, we are required to compute the x, in which we understand that the in-house management of the receivable and factoring services, we are required to form the equation. So calculation of value of x total cost for in-house management of receivable is equal to total cost for factor 5,60,000 plus 35 lakh 55,556x is equal to 1043,200 plus 551,823x. Now x value is transferred on the set, so it will become negative. 35,55,556 minus 5,51,823. X is taken common. 560 is transferred on the side. So 1043,200 minus 5,60,000. So 1043,200 minus 5,60,000. So 4,83,200 divided by 35,55,556 minus 551,823. 30,03,733 into 100 for getting answer in percentage. 483,200 divided by this 16.09%. So effective cost of the factoring is 16.09%. So just giving explanation to you that say suppose you are doing this answer with the method number 2, then how would you pursue it? Working note number 1, calculation of the credit sales 160 lakhs will remain same. Working note number 2, collection period will remain same. Step number 1, loan amount will debtors amount will remain same. Step number 2, that is the loan amount will remain same. Now step number 3, calculation of effective cost of factoring. In that, so you are required to mention something like this. Payment of factoring commission, it is 160 lakhs into 2%. That comes to 3,20,000. Payment of interest, we understand it is 31,28,889 into 18%. So it is 563,200 less savings of bad debts 160 lakhs into 1%, because right now 1% of the customer default. So 1,60,000 less savings of collection cost 2,40,000. So there are two advantages and there are two expenses. So net cost 320 plus 563 200 minus 160 minus 240. So 483 200. And effective cost of factoring. It is 483 200 divided by the loan amount. It is 30,03,733. In step number 2 that we compute. Into 100 for getting answer in percentage term. That is 16.09%. This is what we understand. Second part of the question. If the bank finance for working capital is available at the rate of 14% interest, should the firm avail factoring services? That is a question. I want you to answer in the chat box. Then in the second part of the question, should the firm avail factoring services? Now basically to answer the second part of the question, we can do working like this. I request all of you to write down answer along with me. Method number 1. In that, say what you can do. In-house management of the receivable. In that we understand that in-house management of the receivable has cost of 5,60,000 plus 35,55,556 into 14%. Friends, in case of incremental approach, the cash discount is required to be ignored. Why? Because we understand that the cash discount expense is going to be incurred whether you appoint the factor or not. So there is no savings of the expenses. So we do not have to write it. 35,55,556 into 0.14. So 5,60,000 plus 4,97,778. Total is 10,57,778. This is what we understand. In case of the in-house, similarly we are required to make the comparison of this with the factoring services. If at all we appoint the factor, then what is the cost? The cost is total here 10,43,200 plus this 10,43,200 plus 5,51,823 into, again the cost of capital is 14%. So 10,43,200 plus 551,823 into 0.14. So 77,255 plus 10,43,200. So 11,20,455. Like that, say you make a comparison of the cost and you select the option which is having lower cost. This is a detailed method wherein you don't have to apply your mind, you just have to execute the answer. So we understand that say do not appoint the factor. And method number 2 is like this. Everybody is requested to pay attention. See, the cost of capital is 14%. It is less than effective cost of factoring. What is effective cost of factoring? It is 16.09%. So do not appoint factor. We understand that say your own cost of capital is less, then why do you want to appoint factor? Appointment of the factor is very expensive. So it is going to have a cost of 16.09. It is more than my own cost of capital 14%. So I should not appoint the factor. So this is the way we can take decision.